I've called it gold with wings. I mean, you can actually use it. Can't really
Gold
do anything
wings,
with
I like
gold.
that.
Like, I mean, it's like Red Bull gives you wings, like Bitcoin gives your gold wings. Like, to me, that also adds to its growth potential, just the usability of it. The idea that it's the same reason you might want gold, right? For independence from the global monetary system or something that's perhaps uncorrelated with other types of assets. But this one you can actually use.
And you guys, when you show the data like you guys show, and we focus on this at Swan too with the Nakamoto portfolio, but just trying to get across this idea that even if you include a small percentage allocation to Bitcoin in a more traditional diversified portfolio, it can do wonders for you, like long term in terms of performance, right? You guys put out that report recently. What were some of the
Yeah.
takeaways from that? Because I think that's just important for people to understand that, this thing, given its uncorrelated nature, could really benefit just a portfolio. And what did some of your data show that you guys found?
What would its Sharpe ratio have been, right? So that's the risk adjusted return. So that's when you adjust for the volatility of an asset. What would it have done to the entire portfolio's risk adjusted returns? That's question one, and I think and not too difficult a question to answer. Again, with historical data. So looking backwards, the second question, which is I think also very interesting, in some cases trickier, is okay. So now you want to get off zero. From where do you draw? Where within a portfolio do you draw that allocation? But that also comparative questions into how you think about what Bitcoin is, right? I mean, is it a store of value like gold or a metal? Maybe it comes from a an alternative investments bucket like real estate and metals,
Mhm.
or is it a tech growth venture bet on I've sometimes thought of Bitcoin personally because of how big I think its potential is, in terms of market cap growth, that it's kind of like a venture bet on early stage gold, if there is such a thing, although of course there's not, right? So we're when you
Yeah,
get
I
into
love
the
that.
narrative, yeah, when you get into the narrative game of where to pull an allocation from, we have a view on it, which I'm happy to share. But those are the two main questions. And I think when you do that historical analysis on the risk-adjusted returns, we did it looking at a bunch of different allocations from a bunch of different buckets of a portfolio. So from the equity allocation or the fixed income allocation or an equal allocation or a commodity allocation, right? And the the reality and so for the report you're referencing, Sam, which you can read on our website at galaxy.com/research, it's called the impact and opportunity of Bitcoin in a portfolio. Many people have done versions of this. It obviously, all of these analyses, the time period that you look at matters, right? We tried to be very fair, which is pretty standard for these. We did 2018 to present. So we covered two full bear markets and one bull market, right? So you had 18, 19, 20 as a bear, and then 21 and some of 22 as a bull, and then the rest to present. Again, trying to be fair, because to be clear, if you look further back, Bitcoin performance only looks better, right? So we're not
Mhm.
suggesting that
Cherry
people,
picking. Yeah.
yeah, right. We're trying to be fair with this and frankly conservative. I mean, I would say like at pretty much all levels from all allocations, it was including 1%, 2%, 3 from each of those buckets. It was extremely additive to the portfolio from a risk adjusted returns basis. But I think what was the most interesting is the biggest delta between two levels was between 0 and 1, right? Which kind of reaffirms this, long said mantra of just get off zero, right? Like
Yeah.
the biggest enhancement to the portfolio was just allocating 1 from 0.
Yeah.
And that's what we found. So I mean, and then we use that data elsewhere, right? I mean, this is the type of thing you rerun periodically, right? It's not, again, it's not rocket science to do this analysis, but it's
Yeah.
the methodology matters. We try to be conservative.
Yeah, and like, yeah, an individual's allocation is unique to them, like the position size is unique to them. But from a
Right.
lot of this research, similar research, you could say that the wrong allocation is zero. I mean, that's a
That's
consistent
exactly
across
right.
all of them, right?
Yeah, I
And
mean, if you put in 100%, then you're 100% exposed to Bitcoin volatility, right? I mean, so
right.
the whole key with volatile assets is position size. There's nothing wrong with volatility can be great. You just want to make sure that you control the volatility with your position size, and the volatility can help obviously the overall risk performance of the portfolio. But yeah, exactly. I mean, obviously,
Yeah.
if you did 100% from 2014 to present, you'd be a genius, genius
Right.
investor.
Well,
But
I think of it the same way. I like how you phrase it as a like gold like, venture bet almost. Like it has a unique characteristics of of gold, that value proposition, but it's also a, like a young tech stock or something like that. So
Yeah,
I
it's
think it's
got a lot of growth
extremely unique.
potential.
A lot
Yeah,
of
and
growth potential, yeah.
I've called it gold with wings. I mean, you can actually use it. You can't
Gold
really do
wings,
anything with
I like
gold.
that.
Like, I mean, it's like Red Bull gives you wings, like Bitcoin gives your gold wings. Like, I mean, because like if I have gold coins, right? If I have American Eagles, which are the ones I typically like, those I'm not going to pay with the whole coin. I'm not going to I'm not going to melt it down when I go to the store, right? I mean, it's pretty inconvenient to use as payments, let alone if you're storing large amounts of wealth. Like, it's physically heavy, like it weighs many kilograms, right? So like
Money.
we know this already. I'm just saying it has similar, of course, your audience knows scarcity properties, etc. Self-sovereignty properties that's holding your own gold or gold coins has, but you can actually do something with it, right? It's weightless anywhere with the internet. We all know this. So to me, that also adds to its growth potential, just the usability of it. The idea that it's the same reason you might want gold, right? For independence from the global monetary system or something that's perhaps uncorrelated with other types of assets. But this one you can actually use. Like, to me, that's just a net obvious positive.
Yeah. I just read about like the Bank of Poland, the Central Bank of Poland finally repatriated its gold from World War II from London in 2019,
Wow.
and it took them like it was like a 2-week operation with trucks and planes. They
Yeah.
had to be secretive about it. They had to move all this gold, and I was like,
Right.
this is another example, right?
Yeah, there's that story. I don't know. I've actually seen that maybe this isn't entirely true. I'm not sure, but the story that after the U.S. suspended the convertibility of the dollar to gold, that France sent a warship to retrieve their gold.
Hmm.
I don't think it was as far as I understand the story, it's not because they were threatening war. It's because they're going to transport a lot of money. Like, it's physically, they need a big giant ship with guns because like it's because it's a bearer asset. So I mean,
Yeah.
again, like not everyone has a warship. And
Yeah, it's like that meme with all the
so I
gold, and then there's
yeah,
just like a hardware wallet, and it's like whatever, $100 million,
right.
classic.
Yeah, and I think it's reasonable to think of it as a risk asset. I think
Same.
going back to the sort of original point, like the market has for a long time mostly traded it as a risk asset. I think the earlier periods in Bitcoin's price history where it was mostly uncorrelated to, say, the S&P, it was much smaller. Like, I mean, it's uncorrelated because like nobody who traded S&P was trading Bitcoin. It got more correlated during parts of the last bull run when people who trade both were trading it, right? I think
Mhm.
so. I do think it will become less correlated over time. I think if you look, like I said, at the fundamental thing, it looks a lot different than other stuff. That alone should be reason for it to trade differently than the stuff, right? I mean, I think you have to assume at some point markets are rational and they actually figure out what they're trading. Not everything's a meme trade, right? Like,
Mhm.
not everyone's trading momentum. Eventually, people are buying something they understand, and so over time, I think it becomes less correlated with other types of risk assets. But I mean, it's really quite reasonable, I believe, to trade it either way as a risk off or a risk on asset. I think we're still probably on balance in the risk on period in terms of correlation, but
Yeah.
over time, I think that goes down.